And an economist, Professor Ken Ife, joins me from our Abuja studio live to have much more on this discussion. Good to have you join us, Professor Ken. Now, let's start off. We start off with the week with the President's signing of the 2019 Finance Bill into law, and commendations have poured in, and we've also had some cautions raised here and there. How did this news come to you? Talk of promoting fiscal equity, shoring up government revenue.
This is a great news. In fact, this is the most important piece of legislation for business in a lifetime. It has implications for virtually every sector of the economy. It delivers a lot more revenue to government. It frees the base of our economic pyramid, which is the SMEs. It now puts the whole country not only as an investment-friendly destination, but also as a highly competitive economy. And I can buttress some of those. The reforms on the oil sector and petroleum tax will give the government well over £500 million this year and £1.5 billion every year going forward. But we also know that the revenue coming to the government from tax increase, which is long overdue, only just brings up to half of the VAT rate. The average rate is 15% in the continent. It just only brings us to half at 7.5. But it's going to be a lot of revenue for states and local governments to enable them pay the minimum wage. Very important. Otherwise, we're just going to go into another winter of discontent. But the biggest gainer is the MSMEs, the micro and the small business that have seen their lifestyle, that have seen their income potential rise from 1 million to 25 million, both in terms of being tax-free, tax exempt, and also VAT exempt. I don't think we've dreamt of what the repercussion of this finance bill. Now, these companies are going to earn their money, keep their money, reinvest their money, and then grow strong, because the entire environment for business has benefited from the 4 years of successive increment in the ease of doing business. So the whole recommendations of the ease of doing business in relation to tax has been captured by this new legislation. But it's not just the small business that benefited. The big business is benefited more. I tell you why. Nigeria has been an unacceptable destination for corporate group headquarters. They don't like Nigeria because we have double taxation. So your company makes profit, and then when it comes to the holding company group, it still hits you with another tax. Now, that second layer has been removed. And you can now see core investors, big-time multinational group companies coming into Nigeria. And let me tell you the implication of this. Not only that it's going to enable them see all other opportunities in our country, but it's actually going to deal with the issue of transfer pricing. Now, many of the group headquarters stay out, like in Dubai, and then they use their headquarters there to do transfer pricing. So your price they charge for their things coming in and going out undermine our profit, our economy. But now, if they sit in here, we'll gain all that. Africa loses about $84 billion a year on illicit transfer. Nigeria is at well over $8 billion. So, you know, it's a minefield. And many other sectors, apart from the two I've mentioned. Okay, look at the increase in VAT. It protected the weakest in our economy, the poorest in our economy, by excluding food.
Let me button here now, Professor Ken. Let me button here. Now, yes, this is long overdue, but so many are saying that, is this the right time we should have this increase in tax? Yes, it's relatively low, but at a time when inflation is rising higher, double digits, FDC is projecting 12.01%. We are still having a stall with the minimum wage as well. Is this the right time, given the Nigerians are now also taking almost at the same time? That's the notion on the streets.
But that's not true. I tell you why it's not true. First of all, the average VAT in the continent is 15%. We are well less than half. We are 1/3. Two, to join the eco-currency, we are required to ramp up our revenue to GDP, government revenue, to 20%.
The tax ratio.
Our tax to GDP is only about 6–7%. So it's long overdue. And secondly, in relation to inflation, the problem we have with inflation is the food sub-index. And the protection has been given by not charging VAT on food. food items, and also not charging it as input to raw material, to agro-industrial. So that is where it could have brought more inflation. But now that it has been, if you look at the packages for food and beverages and all that, they are protected from VAT increase. The consumers are protected from VAT increase. So there's no way it goes to lead into inflation at all. It doesn't.
Okay, Prof. Now let's talk about small businesses. Earlier on in your commendation, you talked about the CIT. Now, with turnovers less than 25 million, companies will be exempted from the company's income tax, and a lower rate of 20% to apply to medium-sized companies. That's with those with a turnover of 25 to 100 million naira. But how much of a support is this to the real economy? I'd like to have your thoughts talking about the persistent hindrances and bottlenecks that stifle Nigerian businesses currently today.
Let me give you an arithmetic. I'll give you an assignment. Can you look at, there are 41 million MSMEs in Nigeria, contributing about almost 50% of our GDP. Now let me give you an exercise. Multiply 40 million, which are the small and medium, and small and micro. Multiply that 40 million by 25 million naira. And you see it's in the neighborhood of 1,000 trillion naira. Now, convert it to dollars. You are going to see well over 1 trillion entering into the GDP calculation. This is huge. Obviously, it's going to take us many years for us to come to that point where the average MSME has 25 million turnover. It is huge, by any description. But then you also have to look at the fact that it's not just the tax itself, but the tax administration. The tax administration is the biggest killer. When you send in your account, you start quarreling with the tax authorities. For 2-3 years, they will not give you tax clearance. You cannot tender for contract, local content, all of those. You are in trouble. Then if you pay VAT, you miss filling it one day, even though it's problem. So there's all sorts of problem for these businesses. So all this red tape and all these things are going to make them focus on their business, build their reserves, have disposable income, invest them back into. You can borrow money. They can borrow, but they can now reinvest their profit to grow their business. This is phenomenal. The impact is phenomenal.
Talking about phenomenon figures, now let's also touch on the tax to GDP ratio, which you also highlighted on. But for so many now, one of the biggest cautions we've had so far is the fact that Nigeria is still not taking enough of aggressive steps. Talking about covering the informal sector, we still have to increase our tax base, our tax net. So now, what steps do you expect with this development of the Act now coming into bear? What developments or issues do you think we have to correct this time around with this new development?
Now, first of all, the threshold, raising the threshold to 25 million actually encourages those 60% of our economy that are not captured, which are the informal traders. This will encourage them to migrate to formal traders because they have nothing to fear. To give their BVN number and TIN number and all of that, they know that they may have 2 or 3 years before they even get to the threshold of 25 million. And then not to worry about VAT. It's going to encourage them to come into the sector to be captured. And also, you know that when they are captured, then policy can see them and then reach out to them. So it is going to have a multiplier effect across the whole spectrum. It will create a lot of employment because this is the area where jobs are created. If you take, for example, with a turnover of 25 million, you could easily employ 10 people or more. But can you imagine 40 million businesses employing just one person? That becomes 80 million business. So it's a minefield in terms of what it could do.
Professor Ken is quite optimistic.
Liberated our economy.
Okay, now let's also talk about the cautions that we've had from the World Bank, from the International Monetary Fund as well, talking about the debt crisis around African countries. Nigeria is not exempted from that. But now, talking about building shocks, since the government insists that we don't have a deficit challenge, rather we have a revenue generating one, what's your expectation of an improved economic environment so that we have this step really go in the right direction, talking about showing up government revenue?
Well, one thing we have all accepted is that we do not have a debt crisis because we have a significant debt ceiling. Even if you add the $29.8 billion to be borrowed, add it on top of the
it's still not up to 50%.
20%, 21% of GDP, where the benchmark is 40%. So where the problem is in revenue, is the revenue crisis that we are facing. And the import of this 2020 finance bill is to create more avenues for the government to raise revenue, from the petroleum tax reorganization, from the VAT. There are many sources. They have actually opened up the space for businesses to grow. After all, if the businesses grow, your tax revenue grows. And it has unlocked virtually every sector. Look at investment and real estate. It has unlocked the estate. If you look at capital market, it has unlocked the capital market. All the iniquities and unfairness in the tax have all been normalized, opened up. And you're going to see more competition coming in. And they're coming in the AFCTA and all the ECOWAS. We are now ready to go out and compete with the others because we have our private sector has been set free. Infrastructure have a lot of incentives for businesses to come in and invest in infrastructure because government doesn't have enough money to do that.
Professor
So there's
Ken,
little or no sector that is not affected.
we've also had certain issues also being raised by analysts like yourself who have said that, well, from the aviation sector, we should expect to see a hike in price of airfares and traveling by air. And automobiles, dealers in automobiles are saying that, well, to buy whether brand new or slightly used vehicle will be much more expensive, talking about the increase in the value added tax. Now, are these just mere fears being raised, or it's just a sideline that we should ordinarily just accept?
Well, you tell me, if you can afford to pay 25,000 naira to fly, you are telling me that 2 extra percent, 2.5% extra is going to stop you from flying. You know, it's neither here nor there. You know, I don't agree with that. But I also have to say that the aviation sector, we need to bring in more competition and then make sure that we can bring more diversification so that more people can enter the fray. And if they enter the fray, prices can come down.
But you know, aviation sector is also dealing with Jet A1 fuel, which is going at very high cost. And they're saying, look at Dubai, look at other countries that have subsidies for Jet A1 fuel. So that also translates to the cost of tickets and flying. So once again, with this increase, it means the average flyer would have to pay much more.
I don't think so. I don't think so, because if you have more capacity being filled, more planes, more operators are allowed to bring in more aircrafts, and they will create the volume, the necessary volume that allow them to temper the price. You're actually telling me that the price is the most economic price. I don't even think so. So that sector, and I like the idea that FAN is self-sustaining, is paying for all this infrastructure development, and it needs to be encouraged by government, and the tax that they pay to government should be reduced further because it is one agency that is self-generating in terms of revenue and salaries and the capital infrastructure. So I think they need more encouragement so that they can also be tempted to reduce some of the landing costs that they charge to the aviation sector.
Yeah. Yes, Prof. Now we are wrapping up conversation slowly. We have 8 years after the dissolution of the board of the Federal Inland Revenue Service, and today the federal government is expected to inaugurate a new board for the service. The Senate had already, during plenary, confirmed the appointment of the reconstituted board members along with the FIRS chairman. But what's your thought on this composition and strategies to further grow revenue in the country?
Well, the revenue base needs more diversification. And the finance bill has created more impetus for that diversification. We need to widen the participation of more people in the tax, to enter into the tax net. And the way you do it is self-assessment and use of online payment systems so that people can voluntarily declare their revenue and consider what they think is appropriate based on widely publicized guidelines. Then they get their ticket, they get their receipt from paying online. They get their receipt, they don't have to deal with intermediaries. And then they can do their tax clearance and all of that stuff. But then, once every 3 years, an officer can review the online the self-assessment and then sit down with the individual or the company and go through it using the instruments and all the tools that are available. If you look at the Lagos one, they have a lot of tools that could compare your tax return to somebody else's tax return or some reference tax return per sector. And then there you will see that you've been cheating and all that kind of stuff. So that is something that comes down the line. But we have to be more empathetic and encouraging to suck people into the tax net. And also all the grants that you are giving to people, all the freebies you are giving to agriculture and all that, let them open an account as a starting point for receiving any grant or conditional transfer, whatever. Let them open an account. Once you open an account, you have a TIN number there. Even if you are getting 10,000, we'll call it trader money, open an account. TIN will be there, your BVN will be there. After receiving 10,000 today, maybe in 3 years, you will become a business of 1 million. So you have to do that to widen the tax net.
Okay,
and then
thank you very much.
Illicit transfers.
Thank you very much for your
pleasure.
time. We'll definitely have a longer conversation some other time. It's been a pleasure speaking with you, Professor Ken Ife.